Hey everybody. Uh, it is showtime. Let me just. Hey everybody, we'll just give folks a chance to drop in here. It was late notice as usual. This is quite an interesting market. I've been saying that for a couple of weeks and, well, the better part of 30 years, I guess. Let's give everybody a couple of minutes to get in here, and then we'll just do a quick show here. I don't want to take a ton of everyone's time because, of course, we've got Google earnings coming up. Hey, everybody, one more minute, and then we can chit-chat about what's going on. Oh, I've got a little bit of a delay here. Interesting. Okay. So let's talk a little bit about the texture of this market. Again, a little surprised in a way that look at this VIX, beautiful coiling action. Right here, we were able to set this line. There, we kind of touched it again. Down here, a break above, and then a little drift down into the lower part here. So if anything, this would argue for a bounce. If we're going to hold this technical level here, we're going to bounce. And that would mean a sell-off in the market a little bit more broadly, right? So we know that what we've had really in the last, in the last while, but really we've been talking about it for a couple months now, which is really just this big rotation going on, right? It's a massive rotation out there. Oh, by the way, Hans, former pro market maker, ran a whole bunch of income and black swan funds for many years, and $1 billion in AUM managed. So happy to help folks learn options the right way and combine options with investing. I really tend to be, unlike 30 years ago when I started off as a young pup pro trading, I did 200 trades a day. A little bit more position trading. So that's kind of the style. We have LEAPS Trader, we have Turbo Trader, we have a number of great programs that people are enjoying. Actually, we're sitting in quite a bit of cash in those programs right now. It's starting to allocate a little bit more, but we avoided almost entirely in fact, I think in both, we avoided completely the 35% momentum sell-off. And so I'm very proud of that because I talked about, I don't even remember where it was, this one side of the boat. Oh yeah, it was one side of the boat. So on one side of the boat, I was basically, I warned everybody, this is getting very, very, very heavily weighted to one side of the boat. And of course the boat tipped. So that was the big semiconductor, a memory sell-off, a storage sell-off. And now that we've had that, I think we've kind of flushed things out. So there's a chart that's floating around showing that the leveraged AUM in the leverage ETFs has come down drastically. And probably in the semiconductor specifically, leverage AUMs come down probably about 40%. That's a lot of unwinding, right? So I talked in this video a few weeks ago, right before with the sell-off, June 29th, I said, listen, these are all the things that are really going to pressure and plus the leverage ETF. So we talked at length about how this is going to be a very, very difficult trade to keep going, right? This is just too hot, too much money going in. And we saw what happened in Korea, massive liquidations, at last count, 1.3 million account liquidations, 400,000 or 500,000 accounts, completely zero. So really, really a lot of pain over there. And so that's what happens in a mania. And the amazing thing about this is it's very similar to .com. I went through the .com, which is a great period of trading for me, but this is really based on a lot of reality. There is a lot of money to be made from AI. And so, but manias come in different shapes and forms, and too many people in one side of the boat is going to matter. So what we've had is a giant amount of dispersion. So this is global equity dispersion. That means stocks just kind of going crazy in one direction, going crazy in another direction. And we've seen some incredible, incredible moves out there. So single name option pricing is as high as we've ever seen it versus the index. So that's incredible, really, when you think about it, than we've ever seen it. In all the years, single name option pricing is very, very divergent from index. And why is that? So again, here we are. Look at the VIX. We're just talking about it for those of you who just came. We see the VIX breaking out, coming back down, testing, and that really depends on a lot of stuff. And the fact that the VIX is so low with all this, with a 35% momentum sell-off. Goldman Sachs has a momentum index, which is semis and storage and all that stuff that we've been talking about. That means that all those things got smoked, and that is a significant sell-off. In 2 weeks, 35% in that entire momentum index. So that was a significant amount of pain. And in all that time, the VIX maybe got to 18 and change. How can that be, right? How can that be? Oh, Scott says, I'm watching IBM for earnings, Google earnings. Yeah, let's talk about that. So really, that's the reason why we're seeing, from an index level, there's not much going on, right? If you look at the SPY, I mean, it's really extraordinary. For us to have had a 35-40% sell-off in high beta, higher risk areas of the market, and for the overall market to basically be almost at all-time highs, that's extraordinary. That's absolutely extraordinary that can happen. And I'm going to show you why that is happening. And it has to do with something I've been talking about all year, which is rotate. There's a big, beautiful world out there, right? A big, beautiful world. And people have been rotating into that big, beautiful world. So let's take a look at what that means and how that looks. Well, it's this. And some of you who've watched a couple of my recent shows, you'll remember this. So let's look at the breadth on S&P sell-off. So we know there's been a ton of pain in neoclouds and memory and storage and all these semiconductor names and some of the higher beta names. But look at what's happening here in the broader market. This is why I've been pounding the table for all year, even since late last year, that there are a lot of areas that could benefit from cheap AI, right? Cheap and plentiful AI, wonderful geniuses in our pockets, which is going to only be pushed even further because of the Chinese models that we're seeing. That only means that we're going to have even more intelligence, capacity to use intelligence, right? You give people something that's $2,000 a month, and then you tell them it's $300 a month, or you go $500 a month and then tell them that it's $6 a month. You're going to have more and more people using that. And that's going to bring me to some of my later points, which we'll go over in a sec, which is where I'm really focusing my trades right now. I'm going to show you where those areas, I think those areas of low-hanging fruit. My wife hates it when I use that expression, but those areas where things have to happen. So the way I'm framing this market is what has to happen versus what are the areas where things might happen, but we have competition, we have improvements, algorithmic improvements, et cetera, et cetera. So, but in terms of how can the market be doing so well when some of those areas that everybody piles into have not been doing well? Well, look at this, what's happened. We're hitting all-time highs, or at least going back almost 20 years. We're hitting highs in terms of the number of names that are up on days that the S&P is down. So when the S&P is down on the day, this is the number of names that are actually up. So you can see the average over that period is 133 names. We're almost double. We're almost double that. That's extraordinary. And that really goes, is everybody clear on how that works? There are so many stocks that are actually performing well, even though high momentum that everyone loves to play is getting hurt. So that's broadening, that's financials, that's healthcare, that's some energy, that is a world out there that is suddenly being recognized again after whatever it is, three years of Mag 7 basically doing all the heavy lifting. So that's really an extraordinary change. And that's how this S&P is sitting basically at the top end of this channel here. And if Google's good, you know, we could break out, which is amazing. And so here's the cues. Now the cues look a little bit different, don't they? Because of course we have that concentration, we have a lot more of the memory, a lot more of those kinds of stocks. So we see this beautiful, beautiful coiling, a breakdown. And this is where I said last week, I said, listen, above 705, we are in the rotation phase. Below 690, we get into the correlation phase, right? So what do I mean by that? Rotation is really what we've been seeing, right? And the last chart I showed you basically describes that, right? It's saying, listen, things are coming out of some areas, but they're pushing into other areas, right? So the money is rotating. That's a very healthy kind of market. It's not money leaving to hide, it's money just rotating into something that makes more sense. If you get down into here, so if we get a poor report from Google, we may push down in the Qs. I think the S&P 500 is probably okay in general, but if we start to push down in the Qs, we know that a lot of people own these things. A lot of the world is heavily into NVIDIA, although I think NVIDIA is good. It's into some of these tech build-out areas. So these earnings are really big. So Jimmy, to your point, the earnings are incredibly, incredibly important. But I think what's more important than the earnings is the commentary on CAPEX, right? So much hinges on CAPEX right now. And right now we see we've rallied back to the line and 9, as I call it. So we got the line and 9, that 9 EMA that I like to watch. If we can get back up into this range, I think this market could explode. I think S&P hits all-time highs. And I think Qs have a decent chance of starting to climb this wall of worry that is out there. Now, for Google, what's very interesting is that typically into earnings, you get a rally, and then we get kind of a period of denouement. A rally into earnings, and then a period of this. A rally into earnings, and then not as much here, but still nice, actually really big rally all the way up to 260, 265, and 255, and then a bit of a cool off period, and then it kept going. So this was the big re-rating for Google, right? We had the big re-rating, which was, oh, Google's going to get slaughtered by search, and I worried about that too at one point. And then it became my biggest position around 225, and I said, no, they've got it going. But because the world is changing so quickly, now we have questions around Google again, right? And so I'm going to get to these Chinese open source models. A very, very important thing to understand right now. So I think the CAPEX is very important because, of course, these guys spend most of the money on CAPEX. If there's a hint of a drop in CAPEX, you have to imagine that the semiconductor trade could take another hit. Right? So we've got the Microns, we've got the SK Hynixes, we've got the WDCs. Storage is very, very important. Some of the most important things going forward are storage, memory. And so what I want everybody to understand is that the market got it wrong. When we started I've been talking about these models and siloing your AI for a long time. If you guys saw my Apple video from 6 or 7 months ago, I said, this is exactly what's going to happen. People are going to bring AI in-house. They're going to use these available models, which are way better now than then. And they are going to basically, for privacy, for security reasons, they're going to say, listen, I don't want all this risk. And now they're going to say, I don't want to spend all this money. So you're literally going to have corporations out there who say, well, I might spend $10 million on tokens this year. I'd rather spend 10 million, set myself up. And then when I have a free open source model going that's customized, I can use as many million tokens as I want. That's it. It's just all my cost is going to be equipment and power, right? So this is really the world that we're heading in. And I think that's what makes why are the mags acting poorly? Well, because I think there are questions surrounding their moats and their strengths. And in a case like Google, I'll tell you right now, in a case like Google, a couple of bad things are happening. And I love Google because number one, it has great multiple spokes, right? That's been one of the great things. It's the greatest AI company in the world, I think, because it has its fingers in so many different things. It's got YouTube, it's got a great model, although not as great suddenly, but that will change again. It's got all these businesses, right? We know Google is a big part of everybody's life, and that's their advantage. So open source works like this. Everybody thinks open source Chinese models, and I don't know why Jim Cramer was saying this. He was saying this yesterday and today. We can't allow this open source stuff. We're going to be sending everything to China. This is a disaster. Let's disallow that. He doesn't know how open source works. Open source doesn't mean things get hosted over there. You get an open source model, you basically bring it over. The intelligence layer is now over there, right? So the whole training layer of AI is located in China because that's where the models are created. They're distilled off of everybody. Everybody's stealing everything, right? OpenAI stealing, Anthropic stealing, China's stealing. Let's not pretend everybody isn't stealing. Okay, so, but these models are great, and you bring the model over, and that's it. You don't have a pipeline into China. They're not monitoring you. You take these models, you customize them, you can use them in-house so that you're not even on the cloud, or you can host them on Amazon, Bedrock, one of these, all those cloud companies do this sort of stuff. Most of them do it. So number one, that's an important realization. This is not, let's give everything to China. So from a security standpoint, that's good. Number two, and this is very important, what happens is these things have to be hosted somewhere, right? So you get a Chinese model, where are you going to host it? Well, Amazon's already hosting. They already have, what's it called? Bedrock, and there's another one. And all these companies do it. Google's got one as well. So they're going to be hosting this stuff in North America, in the US, in safe, dependable places. So think of what the Chinese models mean. They mean this, that the build out doesn't really change that much. And I'll tell you why. Number one, what happens when, and you guys may have heard of Jevons paradox, what happens when you give people something and you drop the price, something that people are ravenous for, they love to use it. What does that mean when you drop the price? You make it drastically, 90%, 95%, 85%, depending on what you're looking at. And these are going to get even better and cheaper. Token costs are going to zero, right? The cost of intelligence is going down. What happens when you give people intelligence around the world, places that couldn't afford $200 a month for Anthropic? What happens when you give them incredible intelligence? You use it more. All these people, we're going to have an absolute explosion of AI usage. And that means massive token demand, massive memory demand, massive storage demand. All the build out in many ways doesn't just not change for the worse for many stocks in the US, but it actually improves. And that's what the market got wrong when they sold these things off. And now, so I'm trying to focus on those areas that are really going to take advantage of that. So when I'm looking at this market, I'm saying, well, okay, Google, I want to sort of wait and see. I love it. I love the stock. I love what they're doing. I love YouTube. It's the greatest asset. The model's been kind of suffering a little bit lately. They've been public about that. But what happens when you start when a Google starts hosting open source? They're kind of cannibalizing their Google, their sort of traditional cloud services. They don't mind because I think they're going to bring people in. There's going to be this massive land grab from Amazon, Google, everything. Once these open source models, once this catches on a bit more, there's going to be a big market share grab. But what that means is there's going to be more hosting. Open source models are hosted in the US, and that's just going to continue. And so for me, this only becomes more bullish. Now, obviously, if somebody comes out and says, CAPEX, I think is going to drop a little bit. I think we're overspending. Maybe we need to shift spending. Maybe we're not going to spend as much on GPUs. Maybe we're not going to spend as much here or there. I think that is, without a doubt, that's a risk to this trade. So I think as you're trading or investing, you want to realize that there's going to be this shorter term vulnerability to that area, that build out area. And you're seeing it out there, right? So let's take a look. We see even in some areas that have gotten very, very expensive, right? So here's GEV, which I love. Remember, I love this at $600. It doubled. Did a video on that as well. Let's see, what else do we have? Quanta Services, that's come off nicely as well. I actually like that one. I'm going to start building a position there because I think you're going to continue to see that being we're going to have to squeeze the most we can out of the grid, right? The grid needs work, and we need this, what I'm talking about today, endless token demand, endless AI demand, which is the inference part of it, right? China has just shot inference demand into the stratosphere. And so that's going to require power, right? We need electrons. So we're seeing a little bit of a resurgence in the idea. We see iron popping, some of the now, Oklo got a little bit of a push from Trump, but look, it hasn't really gone anywhere yet. The idea that there's not enough power is not really playing out fully yet. But I think this is a moment where those will start getting recognized again. So I think power is going to be, so when you think about the stack, right? So when I think about my pyramid of, look, what has to happen? Well, you're going to need more memory. I don't care if it's open source, if it's closed source, it doesn't matter. There's going to be memory in scarcity, in short supply. You're going to need storage. You're going to need, and so there's the storage companies. You're going to need power. So there's going to be a focus on power. Maybe nuclear gets a renaissance, right? So one that I like is CCJ. So I like CCJ. A little pop up today above that 9-day moving average. I'd like to see this get a little bit more constructive. But here's a name that hit 130 earlier in the year. What are we going to need? Well, we're going to need cooling. So we've got VST, that's nuclear and power. VRT, was it Vertiv? I think this is cooling, right? So we're going to need certain things because things have not exactly slowed down. They've only sped up. So I think what I'm going to be watching for today with Google earnings, of course, is going to be the CAPEX numbers. The earnings are important, right? Because you want to feel that Google has some challenges. The cannibalization that I mentioned earlier could be a challenge. The search could be a challenge. But also, if you look at what Google said, I don't know if I have it on here, but let's take this down here. And do I have it here? Look at this. GPU availability tightening back up. B200 was already at 0%. Post Kimi K3, tightening is happening more aggressively, right? There is going to be more shortage of stuff. Now, I think what makes it interesting is that there are going to be chips because we're going to have the ability to maybe not need the Rolls Royce of chips to run inference, which was the case before, but maybe even more so now. I think it opens up the world to other kinds of chips as well. But again, the chip area is very, very challenging. So I think if you're trading the chip area, you're going to find a little bit more bifurcation, right? You're going to get some that are doing well, some that aren't doing well. You've got a Qualcomm that's doing poorly because Apple's basically going to start building the modems and all, but it has other tailwinds, right? So it's a very tricky area, and I don't want to focus on it quite as much. If I did want to focus on it, I mean, obviously memory is an important spot for me. I think a nice way to play it is also just kind of a, like a basic SOX, that kind of thing. I wouldn't get into a SOXL at this point just because the realized volatility is very high, and you're going to get chopped up by that daily decay, right? The daily decay that happens when you get a lot of movement up and down. You start to get chopped up a bit. Yeah. You know what? Of course, none of this is financial advice, right? For education and entertainment purposes. But, I find that Google is dependable. It's dependable. But I was starting to talk about some of the challenges they have. Reddit came out today. Now, this might just be some saber rattling to get more money out of Google. But they said they're not going to renew their $60 million deal, which Google pays them for access to real people data, right? That was always the proposition for Reddit was, hey, this is real people. And in a world of slop and endless AI made up crap, well, we need real opinions too, right? although I have my doubts as to how much is real on there, because in an agentic world, you're just going to be able to have fake people everywhere in every chat room. But anyway, so here's your Reddit coming down. I haven't been a fan for a long time just because of that. I got bearish at 200 and I said, I wouldn't own this thing. And it did this. I haven't touched it since, but it was a great stock early last year. So they've got that problem, and they've got publishers coming out and saying, I can't remember the name of the ones, USA Today, a couple other ones, and they said, we're not happy with what's going on with Google because our organic viewership has plunged like 50%. So think of what happens with AI. Remember when you used to look something up in Google and then you go to the website and then you're on USA Today, and guess what? They've got ads there, which makes their ad spenders happy. And you're now in their ecosystem, which has various spokes of where they can generate revenue. What happens now? Well, you go to ChatGPT and everything gets pulled to you. So what's happening is they're getting much less of the organic traffic from people, less of the eyeballs that matter, right? When somebody's spending money to advertise on USA Today, and people aren't really going to USA Today anymore because they just get everything. AI just hoovers up everything, right? It just absorbs, it steals everything, basically, right? It steals people's books. There are book publishers who are like, my revenue's gone down like 70%. It was dependable for like 15 years. Yeah, AI's stealing it. And when people want self-help, they ask AI. AI uses their information. Now they don't get paid anymore. So it's a massive IP harvesting operation. It's really terrible if you think about it. I use it, but I use AI. I have no choice. But it is kind of terrible what it's going to do to copyrights and things like that, and to the idea of protection for IP. Right? What do you want to create anymore when it just gets stolen? Right? So we have to think about that in the long run, how that affects things. But from Google's standpoint, now publishers are upset. So as this world changes and turns more within the era of AI, remember, ChatGPT was the best. Then Gemini was unstoppable. Now, Anthropic's the greatest. And now Grok is coming up, right? We know Elon's going to be deflationary for the whole sector. So it's the kind of stuff I've been thinking about, and equipment is really one of my favorites. If you guys know, I started calling out Dell around 150, and I said, we're going to be selling servers like there's no tomorrow. And sure enough, the earnings came out and everybody went, wait, what happened there? And I said, yeah, I told you people are going to be siloing their AI and they're going to be selling boatloads of servers. So I think the horse is out of the barn here. You can see that lately it's been kind of, the problem with Dell is that as good as it is, and I'm very long, but as good as it is, it's an assembler, right? So if NVIDIA decides to do a bit more of what Dell does, NVIDIA also benefits from the margins, from the GPUs, from the equipment that it creates. That's a big thing, right? Dell's kind of a lower margin kind of assembly, but because we're early innings on people buying that equipment and needing that equipment, I think that and a few other plays look really good. And we saw from SMCI, which is an awful, awful company, they said big server sales, big backlog. So, take that with a grain of salt because this company is a disaster. But it's very clear that we now have, Apple is another one where equipment, right? The M5 chip, the M7 chip, this is all going to be incredible stuff that people are going to need to run AI locally, in-house, effectively, efficiently. And guess who that hurts? Can anybody tell me who the primary pain points are from this massive build out and from the cheap Chinese models, the cheaper chicken models? Remember, what was it? Father of the Bride. He said, I'll take the cheaper chicken because Steve Martin's really like, he wants to save money on the wedding. He's like, $2,000 for a cake? Are you crazy? I'll take the cheaper chicken instead of the steak. Who gets hurt in this world of cheap intelligence, cheap AI? Somebody tell me in the chat here. All right, I'll give it 5 seconds. We'll take a look at ASTS as well. I'll tell you guys, it's the frontier models, right? It's OpenAI, it's Anthropic. They are now in a race to low. Okay, thank you. Well, what happens is once you give people access to extremely cheap models, so if you look at something like, look at where the usage is. Oh, these are the big banks. Here, I've got a nice chart here. There's a whole bunch of charts floating around that speak to the same thing, right? So here's one of them. We're shifting massively to Chinese models. Now, the share of wallet is still very much in OpenAI and Anthropic's pocket, right? So when you shift to Chinese models, it's not that they're making more money, but the usage is there. And that just means that people are eventually, for their anything less than the top tier of intelligence, you're going to use something else, right? That doesn't cost you as much. There are programs out there, Open Router. There are things out there that are just going to basically shift your queries, your prompts to where it makes sense to where it makes most economical sense. So what that means is Anthropic and OpenAI are kind of in trouble. I'm very curious to see if these IPOs happen, if OpenAI actually pulls this off, because right now their balance sheet is horrible. They're taking on more debt. They have so much debt and obligations, and I don't know if they'll ever be profitable. Now, I'll give them that they have 1 billion sets of eyeballs. That's real value, right? We don't pay for Google search, but they make money off of us. But OpenAI's got to shift because there's no money in selling the model. There's not going to be very much money in selling the model. You'll sell the best to people who want the best, but you're not going to use Fable to figure out, directions to, the amusement park. So a lot of what people use GPT for or use AI for is that you're not going to need the best model. So these companies are going to be in a little bit of trouble because they're now in a severe price war. OpenAI gets hurt. Exactly, AJ. It's going to be a very difficult situation for them. So what they have to do is they have to figure out, well, how do we monetize the eyeballs that we have? And that's going to make it very difficult. Let's see if there's anything else here. This was the massive unwind. Remember the semi ETFs? Absolutely explosive chart. They've lost 60% of their value, which is why we're starting to see a little bit of a bounce as well, because this has unwound, right? We had hundreds of thousands of account closings. So this is what everybody's going to be watching today. So I'm going to leave you guys with something here that is really the whole idea of the Google earnings is really this. And it is what is going to happen with the CAPEX, because look at Kimi K3, look at the capability of this above Claude Fable. Now this is in the code, right? There's all these different measures that they use. So it doesn't lead in everything, but make no mistake, this is getting better and better. And even though it's inefficient, it uses too many tokens right now, which raises the overall cost for a task. Eventually it's going to get efficient. Once you start hosting these things with good equipment, the cost per token is going to plunge. And that's a real problem for certain parts of the industry. So we're going to really be watching this here. Cash flow has gone negative. We're going to really be watching those cash flow comments, the CAPEX comments from Google tonight. And then, of course, we've got Tesla as well. And then next week, we've got more of the big tech names, and we're going to want to hear more. But Amazon will be interesting because Amazon spends more than any of them. I think it's actually well spent because I think Amazon has the potential to be the open source hosting king. But we'll see how that plays out. I'm usually a little bit early to some of these things, but eventually they pop, like the Dell, like many other areas. Okay, everybody. So, and if you're interested, go to leaps.com/guide, leapstolove.com/guide. And that's where you can grab my free Pro Leaps guide. And then leapstolove.com is where we have our amazing program. We've got a ton of new members, as well as the Turbo Trader, which is our flagship program, where we did some SK Hynix trades today. That's where we get strategically greedy. And if you like the sounds of that, check it out. So reach out to info@cashflowinsiders.com if you have any interest. Talk to one of the team here. They all include weekly classes, portfolios, trade alerts, everything. We are having a blast. Thank you very much. I really appreciate it, Roby. And thank you for coming. Well, I try to do these as much as I can. A lot of the time it's just spur of the moment. So hopefully you're okay with that. I'll let you guys know. Make sure you have that alarm on YouTube so that you know when it's happening. Okay, take care, everybody. Good luck. Good luck the rest of the day and tomorrow after these earnings. I think it's gonna be pretty interesting, and we'll keep the party going. All right, take care, everybody. Thanks for coming.